All right, traders, welcome back. And Connor, thank you for joining us again for episode 78 of Trade Talk.
Thank you for having me, Scotty, even though my very meagre performance this week.
Well, look, all of the trades that you were sort of discussing, and you took in the end were pretty valid. It's just been it's like a whipsaw sort of week where at the start of the week it looked like there was some US dollar strength in certain sectors or certain pairs, and now it's sort of like wow.
Yeah,
We
well,
saw
I got stung in the pound. I got stung in
mm,
the pound with the Brexit news. Apparently, they
yes,
don't have to do a hard Brexit, which means that their currency goes through the roof for some reason.
I've
I don't
got
know
yes,
why, but I guess people are perceiving it as some more of a safe haven. Like, I'm not actually sure how it made their currency so strong, but it's all to do with speculators, not so much the actual core fundamentals of economics, I would imagine.
yeah, you're right. Yeah, it triggered because I was in the euro pound long, and I noticed my position was rapidly going in
Yeah,
the negative.
yeah,
And I was like, wow, and I looked at the pound chart just out of curiosity, and I'm like, oh, okay, something's happening. And like you found out, it's to do with, some positive Brexit news. And now we're seeing that, yeah, the rally is, the daily candle is pretty big. Like I'm just looking at the daily chart right now on the pound US dollar, and it's pretty significant for the
mm,
past few months. And how it closed. It closed, bang on the high pretty much too. So, but again, guys, for people thinking buying the pound, you got to understand that if a candle moves like that, there's probably going to be some pullback because the substance, isn't quite there really, like hard fundamentals. So, and technically speaking, it's in a downtrend. Still, like I've got the SMAs up here. Price is still below the 55 and below the 200, so it's certainly not really a buy trade for me. You've just sort of got to be a little bit cautious with just jumping in, a bit of FOMO, and maybe not just rushing in with everyone else because it could get a little bit dangerous. So I've got
yeah. The way that the candles are going, it looks like anyone one would think that they just found out they've got massive oil reserves somewhere or something like that. Like, I'm not sure.
yeah, yeah. It was just I looked
Yeah,
at it and it was printing, and I'm like, oh, this is going to be pretty bad for my euro pounds. And it did get stopped out. So um, sometimes, guys, you just sort of have to just deal with these things where there'll be some announcement made where really it's not too substantial if you look into it, but you can't win them all, unfortunately. So it is, yes, we sort of Connor and I both got the bad end of the stick there, so to speak. But I'll bring the euro up. So you were stopped out here on the euro as well.
yeah.
Yeah, goodness, it's a bit where it is now is interesting for people that trade it. What's your take on that? What would you have to see for an entry here on the euro? Just if you didn't trade the euro or anything, or you're just sort of looking at this like with a fresh pair of eyes, so to speak.
A kangaroo tail, so a
Oh,
pin
yep,
bar going straight through this support and resistance.
yep.
That went up and it was quite a decent one.
Hmm.
Uh, Maybe you could take a trade on the downward. That's about it because the next support and resistance lines, like I've got, is at like 1.18325. So it's not
Oh,
really
yep,
far away from the current price at the moment.
yeah.
So that's on the way up. On the way down to 1.155, that's where I've got it. So there might be a reasonable trade opportunity on the way down. It just seems to be whatever Trump's saying at the moment with the trade war with China, the trade war with Europe. Then you've got, of course, the Turkey
Yeah,
crisis going on with
yeah,
AO $300 billion of US currency. Um, so they've got some. There seems to be some weakness, not some weakness, but they're not. They're taking a bit of heat, the US at the moment, and so is the euro. So it's not a really stable thing to be trading at the moment.
yeah, you're right. So, guys, what Connor's referring to is you've got if you look at the technicals and then you delve into the fundamentals a little bit, just to help gauge, overall the macro perspective, there's negatives and positives going on here. So the euro, you've got quite a few negatives, but then the US is sort of also, they're not rosy either, especially with the rhetoric to do with China, because they're really not, Donald doesn't seem quite interested in resolving the trade war situation, and he just seems to throw tariffs around like willy-nilly. He would just, add 200 billion here like he did recently, and it can really, if you're in a trade, you just have to be aware that that could happen, and or you could tweet something not so friendly about China and the trade war, and they're looking to expand tariffs, and then there's the Europe thing where they put the tariffs on the European cars as well. So it creates headaches, especially for people like us who look for trends where it's just not quite really happening too great recently, especially the last couple of months. It's been down a little bit, but I guess we've talked majors, we've talked US dollar. Did you want to roll into we were having a silver discussion, viewers, before we started filming about it was a major institution there, sort of doing a hedge, and it's interesting.
Well, yeah, 8 out of there's a lot of institutions run. They manipulate the silver market,
Yeah,
and JP Morgan is the biggest one by all accounts. And so what they're doing is they've held short positions for I believe it's a couple of decades now, and they keep pushing the price downwards. I'd have to look at the stats, but it's something crazy. It's like they've got it might be the major 8 banks have 48% of, or it might just be, I think it's actually just JP Morgan has 48% of all short trades on silver or something like that. I'd have to check the exact stat for you, but it's a lot. It's a lot.
Yeah.
And so they're manipulating the price downwards on the ETFs, so on the paper contracts, while they're actually buying up physical silver as their hedge. So it's all just the manipulation. They want people to believe it's this price when physically it's probably worth a lot more, if that makes sense.
Yeah, that's right, guys. So you've got to be aware of that. Where if you're on the long side of these positions, and you've got major institutions like just discussed there by Connor selling it, that's probably not in your best interest.
And all the major institutions seem to know roughly. I'm not sure how heavy the collusion actually is. I couldn't tell you that they all are on a phone call telling each other, but they all roughly know where the stops are, things like that. So they're able to manipulate, sell it to you, get you to buy it to a certain point, and then they'll stop you out, and then they'll take it further down, sell it to you. So they're making money off the retail traders constantly while they're pushing the price down and buying physical silver for absolute steel. So yeah, it's an interesting process. But if you're trying to make money just through on a Forex platform, something like that, it seems to be that for a long time the sentiment is that silver is going down, and you can probably look at that if you look at the weekly or the daily.
Yeah, look, I've actually, now you spoke about it, I've actually got the weekly up as you were discussing that, Connor, and you're right. So guys who are looking, if you're like a reversal trader, you just have to be a little mindful that currently the trend is particularly down. It was going sideways for the beginning of 2018, but it really did take a turn. It looked like at the start of May, and then it's just really plummeted. So obviously the sentiment there is downwards, guys. You've got to be, considerate of where the major institutions are doing, with manipulation, and then obviously if you've made a big purchase, they don't really care about the retail trades, but I mean if enough are all doing long trades, they're going to see a big accumulation of stop losses. They'll spike it up, they'll hit you out, and then it'll keep going down, and then the frustration continues. So if you just trade commodities, you've got to sort of be, maybe branch out a little bit because it's not working if you're failing and failing again and again. And I guess talking till we might as well go to gold and see what that's doing, because that has been a little interesting. It's sort of had a minor recovery. We've discussed gold recently on the channel as well. Now we don't
Well,
really.
shorting gold is buying US dollars.
Yeah, yeah.
So if you want to sell, so if you wanted to short the US currency in real life without taking a big contract out with some leverage on an FX platform, what you would do is you would go and buy gold.
Yep, exactly, Connor. Yeah, that's right.
So yeah, as the US dollar weakens, gold strengthens, and you can see that in the current chart at the moment. However, the long-term picture seems to be that gold is going down. However, again, you don't know what's sort of going on with the market manipulation of gold. That's been going on for a long time too. I believe that you see, we've spoken before, Russia has increased its gold reserves massively. They are now at 6th position in the world for the largest gold reserves. China they buy a lot of gold, but their gold reserves, they are told to have only be about 2.4. So for every every one that they've got out in the universe, that they've only got 2.4% of that can be redeemed back in gold. However, you can't believe a word that China says.
It is hard, yeah.
Far more gold than that. They're not going to tell you. They're not going to tell you how much gold they've got. They don't want to be buying gold for a large price.
That's right.
And then of course you've got the US on the other hand, who have 75% of their gold reserves, and theirs is probably realistically a lot less. But they've probably got a lot less gold than they say they do.
That's right. That's exactly right. But I'm just looking at the gold price now on the 4-hourly. Let's go to the daily. It's a good, like Connor said, it's a good sentiment on US dollar strength, because obviously if the gold price is rallying, people are, they're selling US dollars. They're not really, happy where, the US dollar is headed and, the economy in general in the US. So it's sort of stable right now. It had a pretty strong bullish engulfing candle on the daily chart. So it's interesting. It's just good to see this. It had a bounce. So if you are long US dollars, you've just sort of got to be mindful that your position might just stand still for a little while, because gold is sort of pretty stagnant right now. It hit a high of 12.14 it hit on Tuesday, it looks like. So interesting stuff. But
it's still pretty low. Apparently it costs about $1,200 US to get an ounce of gold out of the ground.
Wow. Yeah, geez.
So they're not making a lot of money on this. And if you actually have a look at some of these big mining companies, especially when it comes to gold, there's the biggest one, I believe, is in Mexico.
Yeah.
And their share price isn't too bad. I think it's about $930. But yeah, they're starting to struggle. A lot of these smaller mining companies and operations are going out down the toilet because they can't afford.
Well, that's right. Yeah, it's you can only take so much running it, break even or not even really, because it's. I mean, the weekly chart though, I've got that up. Wow, kudos to whoever sold it in April, whatever it was, when it broke down. But I mean, that is pretty.
That would all be pretty manipulated, you would believe, by the investment banks and other.
Yeah. Well, you can see the candles, and they're very wicky. Even on the weekly, it's like it's tough, So if you are a gold trader and you're thinking, where to now, it's hard to tell. It is. So I wish we had a crystal ball. We could, look into
like the physical price, you would believe, because it's gold's an inflation hedge.
Yeah.
So and then like we've spoken before, Scotty, you've got a lot of countries. You've got the US 21 trillion in debt, China's 28 trillion in debt. Again, you've got Turkey starting to fold. So you've got a lot of this sort of stuff that's happening, which, if there is to be another inflation bubble or there's some sort of currency crisis, this would be something it's probably undervalued at the moment, gold.
Oh, definitely. I think, like you said, Connor, down the track, we're going to see the US in a really bad situation because of their, money printing and the massive debt they've got. So, guys, if you are holding physical gold, definitely just, that's safe, really, because it could it could just end really. In the end, it will be very unpleasant to see what the US does, because the debt situation is not sustainable. I just saw the time. We're nearly 16 minutes into it, but I mean, we've flown through here and we've discussed a few good points, though. Anything to finish on? Any trade ideas, Connor?
I'm not giving out any trade ideas at the moment. I'm down 6% for the week, so
Yep.
that's my trading done for the week, Scotty.
Yeah, but like I was saying, Tassie house prices are looking good. So at least something's, and physical gold, I think, is probably a smart call though as well. So guys, anyway, thank you for watching, Connor. Thank you for joining us as well, guys. A little bit longer episode, but I hope you enjoyed it. We went through a few interesting points as well. And Connor, until next time, thanks for joining us.
Thank you, Scotty.
Happy trading, guys. Bye for now.